For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockinyoursuccess.com/memberships.
One of the things I would like to teach today, I had a really good mentoring session with somebody today and over the last couple of days regarding price action and understanding price action. And, I believe that this is much, much more important to your development as a trader than any trade can possibly ever be. So what I'd like to do is this is going to be a really advanced topic, and some of you guys are going to maybe have no idea what I'm talking about. If you've been in Market Outlook, you will have a very good idea what I'm talking about, and this is going to add another layer of understanding for you, and that'll be really good. If you're new, it might seem a little bit confusing, but realistically, if you're going to trade, I would say one of the, if not the most important thing is you need to understand what you're trading. And with trading price action, even if we're neutral, we're making decisions on price action and implied volatility. And realistically, implied volatility is due to price action. So it all comes back to, and I know a lot of people get into neutral trading because maybe they've had a bad experience with technical analysis and they've determined that it doesn't work or they can't understand it, and they go to this neutral trading. But the reality is it's just as important if you want consistency and good results and all those manner of things. It's just as important that you understand price action. So, I kind of equate it to if you understand price action and you learn to get a feel for price action shifts, you can trade anything. You can day trade, you can trade long term, you can invest, you can do pairs trading, you can do anything. It doesn't really matter. It can be options, it can be directional, it can be non-directional. It's going to improve every area of your trading. So, and also your confidence level. I mean, part of the reason when I'm talking to traders and trying to train them, one of their biggest challenges is they don't have confidence in anything. And that's because they don't understand what they're doing in regard to price action. And if you don't understand what you're doing in regard to price action, in a sense, you don't understand what you're doing. And I also want to point out that gaining an understanding of price action is not going to happen in a day. It's going to take a period of time. It's going to take a lot of practice. It's going to take observation without the need to make money. So this is one of the biggest things that gets in the way of people. They enter the world of trading. I need to make money, or I want to make money, and I want to avoid loss. So what I'm going to do is I'm going to share with you the last 3 trading days on a 2-minute chart. Now, you'll say, well, that's a 2-minute chart and I don't want to day trade. And that's fine. It doesn't matter. The wonderful thing is that if you can understand price action on a 2-minute chart, you can understand price action on a 15-minute chart. You can understand price movement on an hourly chart. You can understand price movement on a daily chart, because it's all the same. All the same types of things are playing out. They're just playing out in different time frames. And that's wonderful, because now if I understand that, I can look at the 2-minute chart, right? So one of the challenges they have is they're trying to learn price action on a daily chart as the market action is playing out. And that doesn't, and just like Steven says with our trades at a longer term, it doesn't give you many reps, right? So one of the wonderful things is we can go down to a 2-minute chart, and we can play out a 2-minute chart like a whole year on a daily chart in one day. And we can do this over and over and over again. And we can get an understanding of the price action within our asset, and that will flip over and that will apply to our daily charts and our weekly charts and so forth if we want to trade a longer term time frame. Or we might decide, hey, we just like to we like to trade the shorter term time frame because it was kind of fun. We can do that also. It doesn't really matter. But it's not about support and resistance levels per se. right? And predicting direction off of that. It's understanding what should happen if the price is going to continue up, what should be happening, and what should be happening if the price action is likely to continue down, and whether or not any particular signal or anything of that nature means anything in the particular context that you're dealing with. So all of these, I think, are very, very important. And when you do this, or you start to do this on a regular basis and you get some experience, you learn to get a feel for the price action shifts. We talk about in market outlook, for you guys who are market outlook, a lot of times I can say that, hey, I think the price is going down here and it's just a really high probability. And you might look at the chart and you might say, I don't see anything there, but I have a feel for it because I do it. And it's just like, a few weeks ago, we said, when they said the market's going up, it's like, maybe I don't see it in the chart yet, but I can feel it coming. I can feel the shift coming in and I can feel the shift leaving. And when you can get a sense for that, like I said, you can do anything. So I wanted to take a look at the price action over the last 3 days. I want to talk about directional biases and entry and exit points and things like that. So I'm just going to start with Monday. I'm not going to look back. So realistically, when we're doing technical analysis, we should be aware of longer term timeframes. So if I'm in a 2-minute time frame, realistically, I should be aware of what my 15-minute time frame is doing. Or it helps to be aware of that. It's not necessary, but it helps to be aware of that if you want to improve your odds of certain things happening at certain times, or what should happen at certain times, or meanings of things happening. Like, for example, if I'm on a daily time frame and my daily time frame says that this is a resistance level, then I'm looking for a retrace here that's larger than normal on my 2-minute chart. That's likely to reverse and go higher. If I'm purely playing in a day trading type of thing, it probably doesn't matter to me. So time frames are very important. And you do want to match your time frames with what you're trying to do. So if I'm doing a 77-day trade, and I'm in general, I'm not anywhere near a 2-minute time frame. I'm not in a 15-minute time frame. I'm might be in an hourly time frame, but mainly I'm daily of some 77 days to expiration. I want to pay attention. If I want to time my entry, I might shift down to like a 90-day time frame. If I want to time it really precisely, maybe I'll shift to a 90, and then when the 90 is playing out, I might shift to the 15, and then when the 15 is playing out the way I want it, I might look for the 2-minute chart to decide whether I'm going to jump in here or not. Right? So we might do that, and I might do that with an adjustment too. Like if I want to make an intraday adjustment because I'm getting I got a breakdown in the market, and I'm trying to decide what to do, I might break down to a shorter term chart to make those decisions more precisely. But in general, I want to. But again, you see how I'm putting my time frame to the purpose of the reason I'm actually making the decision, right? So I want to make a intraday trading decision. Okay, I want to be down in a low time frame. I want to make a decision on a 77-day trade. Yeah, and I'm 60 days to expiration. Yeah, I'm in a daily time frame. So we want to make sure that that we're matching that. That said, I'm just going to focus on what we have here because we have to start somewhere, and we don't want to cloud what our thoughts are. So I'm going to take a look at this in the context of both bullish and bearish. Okay, so here I am on Monday, right? I have a gap up open. I can say, I want to play that bullish. Or I can say, I want to wait for a reason to go bearish. I can do either. It doesn't matter, right? So, and this is the big point. Everybody's like, I got to be right on direction. No, you don't. You just have to choose something and see if it plays out and know when it breaks down. That's all. Or when it breaks the other way. That's all you have to know. You don't have to know what the direction's going to be. I might lose a trade. Yeah, you might. But the thing is, you're going to lose a small amount of money because you know when it's going to break down. And then if it continues, you're all set, right? So let's just say it's going up. So I'm just going to play this long. I'm going to buy, I don't know. Like I said, the trade doesn't necessarily matter, but I'm going to buy SPY here. So what I'm looking at is I've taken a bullish position because I think the market's going up. So I enter here right on the market open, slightly over the beginning here. And where do I want my stop? Well, first of all, this trade should be planned out, right? But realistically, if I enter here, I shouldn't be under this level. And I'm going to want to know what that means for me financially if this ends up stopping out. But realistically, the market shouldn't really be trading under here. So I'm going to wait and I'm going to let this play. And the market goes up, the market goes up, the market goes up. And as it's setting new highs, one of the things that I want to do, if I'm bullish, I want to get a feel for this. I want to say, okay, well, this is where the market opened. This is where my current asset price is. I really shouldn't get more than a 50% pullback. See that 50% level, like halfway between where my cursor is and where the line is. I really shouldn't get much more than that. Okay, fine. Then the next candle plays out. I really shouldn't get much more than that. And then the next candle plan is out. I really shouldn't get much more than that. Okay, fine. Here comes my pullback. Pulls back to my 50% level. That's normal even if I'm bullish. Okay. Now, this bounces that level. Fine. That's what I want, right? If I'm bullish, that's what I expect to see. And I come up and I set in a cup pattern. Market all week, we see that all the time, right? What are my expectations here? Well, I'm going to give a minor pullback. And by the way, right? Well, not yet. Okay. So I'm probably going to get some sort of a minor pullback here. I really shouldn't go underneath this candle or this. Like if I was on a shorter term time frame, I have a I should stay over that. Okay, and then if I have a shorter term time frame, this is a pattern in my shorter term time frame. Like if I went to 1 minute, this is a bullish engulfing pattern, right? So on a 1 minute chart, that's probably going to be another cup and handle pattern. And this is going to be this is my cup and this is my handle. On this here, I have a bullish engulfing pattern and I shouldn't break the low. Once I break my bullish engulfing pattern, I really shouldn't be, if I'm bullish, if I'm laddering my stop, I really shouldn't be penetrating this level or close under, right? Because I'm concerned about close because I'm on a 2 minute chart. I really shouldn't be under this level now. Okay, so now I broke out and now I have a higher level too that I'm dealing with for my 50% level. So I'm just doing the same thing. This is my 50% level playing out. This penetration was okay on that level because that level was lower before. Now the level's higher. So now my stop level is actually rising with my or my potential reversal points rising with my technicals. So I break out. Realistically, if I'm bullish, I don't want to see a close under this level. Also, I'm starting to set a trend in. So I'm looking at this from multiple contexts at the same time. So this is my horizontal context. Now I start to have a diagonal context because the market price is building in, right? So none of this other price actions here. So now I have a low that's set. So this is a swing low off a pattern. I have a low that's set, and now I have a trend line. This right here is a potential stop point. Like I said, it depends on the time frame you're trading and so forth. But if I'm day trading and I'm expecting a large move to follow through, it's going to start to be evidence, right? So we're going to start to talk about breakdown evidence. But I came up into here, I set this pattern, I broke out of this pattern, and now I really should be, now that I activate drawing, now that I broke out of that pattern, I can go here. I don't really want to see a close under that level. And then if we go, we end up breaking out of this pattern, which is basically off of this swing high here. Escape. I don't want this to get too clouded, so I'm going to start deleting stuff soon. So don't worry about it. But now you can see that this price pattern here, boom, 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 breakout. Okay. It also is increasing here. So my 50% level is rising also. This is my new breakout level. If I'm bullish, I really don't want to see that penetrated. Now, if I come up here, I penetrate this didn't really penetrate the trend line, but let's pretend that it did, right? So I penetrate my trend line. When I'm looking for a reversal or an exit or a switch into short, I'm looking for a penetration of trend line and then a break of some sort of a horizontal support or maybe a head and shoulders pattern to the downside. I'm looking for two of them. A break of a trend line is only evidence that the trend is slowing. It is not evidence that you're going to go down. Okay. And it's normal for a trend to slow during the top. So what I want to do here is when this breaks trend line, I want to look for my horizontal support level. And again, it depends on what time frame you're playing. If I'm playing very short-term time frames, I might do it up here. If I'm longer-term time frames, I'm looking for my 50% level of break down here, right? So this flushed the trend line and broke up. This is a 2B reversal on a trend line. It tends to be very bullish in the short term. Not a surprise we got an up move here. But now I want to modify my trend line. I want to activate my drawing. I want to modify my trend line. I also, now that this broke out, I want to move this up into my new high. This becomes the new important level from a 50% perspective. This is, let me remove this drawing. This is getting kind of diagonal here as far as a resistance point, right? But I can do my resistance point here. This is my, this is another area that I could look at for a reversal to come into play. And what I'm doing is I'm going from high to high to high. I'm kind of getting the upside of the uptrend. We had a breakout of that uptrend. That's bullish. I like to see that if I'm bullish, right? So I'm feeling good right now. And this is the market situation coming into here. My expectation, if I'm bullish, is for this to retrace, possibly to trend line, which is here, right? Possibly to this point. This is my breakout point of this trend line, possibly to this trend line, possibly to this trend line, and then bounce. No problem, no problem, no problem. This is a cup pattern, especially on a short-term time frame. I might see a bit of a reaction off of that, but I don't really want to see reaction down off of that. So usually the first warning sign of a reversal is a larger than normal size bar. Let's see, I'm going to get some drawing tools in here. Is a larger than normal size down bar with a break of a support level. Again, depending on time frame and so forth, what we have here is I broke this support level on this cut pattern. I broke my downtrend line, and I broke my uptrend line, and I closed under it. And if I was doing a horizontal support here, if I was doing like a horizontal support, there would be one here, there would be one here, and there would be another one here. I broke 3 horizontal support levels. This is a warning sign that we are going down. And if I'm long off of here, this is my exit point. It's also my entry point for a short trade.